My work every day is about trying to help people and families build wealth so they can live their American dream. You know, compounded interest is fascinating, right? It's a great thing. It works for you or against you. When it's an asset and it's an investment or a stock, it works for you. If it's debt, it works against you, and they're equally as powerful.
All right, welcome to Financial Freestyle here on Yahoo Finance. It's your boy, Ross Mack. And look, no matter where you're at in your financial journey, you can never, ever stop learning. That's why I'm so honored to be talking to the CEO of Southern Bancorp, Mr. Darren Williams.
Thank you, Ross. Appreciate you having me.
Man, thank you so much for being here, man. We got a chance to actually talk offline, and I just want to say thanks so much for taking the time to be here. But to the audience, to the people that are watching, who is Darren Williams?
Wow. So Darren Williams is a passionate advocate for financial inclusion. I believe in a capitalistic society, if you don't have access to capital and credit, it's hard to make it. And so my work every day is about trying to help people and families build wealth so they can live their American dream.
Now, you obviously got a unconventional way to becoming the CEO of a bank.
Right.
Former legislator, former lawyer. I remember one of your quotes was that I went from suing banks to actually running a bank. So
right.
let's actually talk about your history and actually becoming the CEO.
Except you can't beat them, join them, right? No, so like a lot of things that I've done well in my life, my wife has been the guide. So my wife and I, we taught a financial principles class at church. And we helped families who were struggling financially just because they didn't have education. We're all ignorant of something. They did not have the financial education to make good decisions. And so we did this financial class, and I was amazed at how well it was received and how much it was needed. And I told my wife at one point in time, man, if I could do what I wanted to do, this is what I would do in my life. I would help people. And my church is a predominantly African-American church, and I was helping mostly African-Americans access capital, change their financial health, and thrive and prosper. And you know, years later, I get an invitation to lunch from the board chairman of Southern Bancorp, and he says, "Hey, we'd like for you to be our CEO." I was like, "Do you know what I do?" It's like I sue publicly traded companies and banks. This is not really what I want to do. I didn't know anything about this bank. Southern is really three companies in one, so a holding company, bank, and a nonprofit loan fund. I'd worked with the loan fund on policy initiatives to help support low-wealth people as a legislator. But once I found out what they did, it was interesting to me, so I joined the board. And I told my wife, I said, "Hey, I got this job offer a couple weeks ago. I forgot to tell you about it." And she said, "Well, tell me about it." And she said, "Well, hey, Darren, this may be God giving you what you asked for. Didn't you say you wanted to help people? You know, nothing like your wife throw your words back in your face, right?" And so we prayed about it, and that was 2013. I took the leap, and it's been wonderful.
That's amazing. So one, right, I want to guys, he literally got the offer to be the CEO and actually turned it down. So that, I don't think a lot of people do that. But I actually want to go back to the church, because I think when the average person is thinking about, you know, access to financial literacy, it's a taboo topic. And so actually having that conversation in the church, what are a lot of the myths that you help dispel for a lot of the people there?
Wow, there are a lot of them. First of all, you know, even in America today, about 13 million people don't have a bank account, unbanked. You know, another 33 million are underbanked. So they may have a bank account, but they still get this predatory financial products. So many folks think, I don't have enough money to even worry about banking. It's not for me. I can't borrow money. Just a number of myths. And so we actually just broke this down. Now in church, we broke it down with biblical financial principles about being a good steward. And no matter what you do, you need to save more than you spend. That's the beginning. So budgeting is kind of where we started. But you know, with information, people can succeed. And that's what happened. It was just rewarding to do that.
That's awesome, man. I think the average person, right, when they look at financial literacy, it's like, well, I don't have assets. I don't need life insurance. I don't need estate planning, or I can't afford a house, right? I don't have 20% down payment. So that's why I do this podcast. It's very fulfilling to actually help dispel a lot of these myths. And but now let's actually get to Southern Bancorp. What is a CDFI? I think not that many people understand, you know, how you differentiate yourself.
Yeah, so thanks for that question. So a Community Development Financial Institution, or CDFI, that's what Southern is. All three of our companies are CDFIs, and proud that we are one of the first, among the first CDFIs ever certified. Is a designation by the Department of Treasury. 60% of our activity must be in what you would characterize as low and moderate income communities. So we focus on serving communities that have been underserved, banking deserts, minority communities, even urban and rural communities that don't have access to banking. So our focus is on folks who just have not had traditional access to capital and credit. And as a CDFI, we're supported by the federal government with grant funding to help us do the work. It's a public-private partnership. So if we help people succeed financially, that's less government dollars that have to come to those communities. And so we really focus on helping people build wealth. We call ourselves wealth builders. And so everything we do focuses on helping people obtain and sustain wealth for their families.
And obviously, we all just came out of the banking crisis of last year, 2023, where we saw 5 banks unfortunately fail. And at that time, everybody thought it was going to be a bank run. And so speaking from a person that, has a pretty large bank, but relative to the other banks, it would be deemed, small regional bank due to asset class. What would you say that 2023 did for your business? How have you guys came out of that on top? Yeah. Just talk to us about that.
Yeah, so the banks that fell and community banks like Southern, we're $2.7 billion in assets, physical locations across Arkansas and Mississippi Delta, mortgage company in Tennessee, Alabama, Georgia, in addition to Arkansas and Mississippi. But our deposit base are local folks. Okay. And we don't have many depositors that have more than FDIC insurance limits. And those that do have more than $250,000 in assets, they're backed by bonds or they are reciprocated in some type of product that gives them insurance. So we have very few deposits that are above the insurance limit, so that concern around the bank, you just don't see it. We just don't have those types of deposits. Now, I will say that the crisis scared a few people. And I had some folks call and say, hey, should I be worried? And we explained to them, their assets, their deposits were back fully, even those above 250, many of them, and it was fine. What it has done regulatorily, the regulators have a bigger target, and they look at our assets. There's much more focus on what the bank's core deposits, but most community banks are safe and solid.
That's awesome. That's great to hear. When I was doing a little research on you, I think it was fascinating because, one of the things you talked about was by serving that core audience, right, that traditionally underbanked community, you're actually being the change that you always wanted to see. Let's actually talk about why that's so important, right? I think one of the first things you said was in a capitalist society, those without access to capital, unfortunately, don't get to live the American dream. So let's talk about how you're actually serving that underserved community.
Yeah, so thanks for that question. So we are a legally organized as a public benefit corporation. So legally, we're required not just to make a profitable return, but also make a difference, make an impact. We also have a designation of a B Corp. So our focus is, unlike some banks, it's not just on profits, but we say it's profits with purpose. Now, no margin, no mission. If I don't make any money, if I don't have a good net interest margin, it doesn't matter what my mission is. I say we're riding a bicycle, right? The front wheel is a mission wheel, which guides and directs us. The back wheel is a margin wheel, which sustains us. And we've got to keep those wheels balanced, going in the same direction. Everything we do focuses on 3 verticals. Things that have been proven to build net worth in families. Pew has a study that says 70% of the people who are born into poverty never make it out. So if your grandmother was poor, there's a 70% chance your mother and you will both grow up in poverty. Wow. But Pew looked at 30% of people who made it out of poverty. So what's unique about that 30%? Why could they make it out and others didn't? One common denominator that Pew found was that they all had some form of net worth. Maybe it was ownership of a home. Mm-hmm. How many people took equity out of the house, started a small business, or sent a kid to college to break the cycle of poverty for that family? So everything we do focuses on 3 verticals that have been proven to build net worth. We focus on helping people obtain and sustain home ownership. Mm-hmm. We focus on supporting entrepreneurs who create jobs and make a better life for their families. And we support people in their wealth building journey in helping to save and accumulate assets. Everything we do focuses on those 3 verticals.
I love it. We actually had the CEO of Bank of America speak earlier. We had a few other people talk, but one of the key things they talked about was home ownership. And obviously, I'll be curious to see what you think. Is it a shortage of homes? Not a lot being built? Is it a function of affordability? Like, what do you think the true reason why Americans feel as though they can't participate in the American dream of becoming a homeowner?
Well, first of all, let me give a shout out to Brian Moynihan, Bank of America CEO, because Bank of America, JP Morgan Chase, others, they've invested in us. They're shareholders. They support the work that we're doing across our footprint. And without them, we couldn't do the work, without all of our shareholders. But we really appreciate them. But it's all the things you just mentioned. So yes, there is a supply problem. Mm-hmm. There are not enough homes in the country. There's also an affordability problem. It costs, when you pick first in rural communities, underserved communities, the South, the cost to build a house You got your land costs, but the construction costs are so high, right? These developers, they want to make profit, they want to make margin. There's more margin in a larger house that may not be affordable. But we have inside our organization, we have HUD certified home buyer counselors.
Okay.
They teach pre and post home buying counseling to folks before they buy homes. So it's not just about getting them in a mortgage. So once we can find the house, once you're ready to get it, we want to make sure you can sustain that house, which is important for us. So if you've been renting all your life and your hot water heater goes out, that's the landlord's problem. If you own the house and the hot water heater goes out, that's your problem.
That's a lot of money.
And so that impacts the affordability. So we make sure that you're ready to buy a house, let's put a little money aside. Let's give you a home savings account. Let's let you make those repairs. And so it's a lot of reasons why we don't have, housing supply. It's supply, it's affordability. But then some people are just not ready. And we're willing to tell folks, you're not ready. You're not ready to buy a house where you can sustain. A house can be a forced savings account and can support you, but also can be an albatross around your neck if it doesn't work.
So one thing that you do as a CEO that's a little different is you are really invested in your constituents, your clients actually being financially literate, right? You tell the story of a young lady, Miss Williams.
Yeah, Jennifer.
Jennifer Williams, right? And prior to coming to you, she had a portfolio of just payday loans. So, and now you're talking about helping people become homeowners. So let's talk about why, you're invested in helping your clients actually become financially literate.
Yeah, so again, in a capitalistic society without capital, it's hard to succeed. And so if you look at a number of problems, health problems, they stem from a lack of access to being financially healthy. And we're actually in Clarksdale, Mississippi, we got a partnership with the Aaron E. Henry Health Clinic and Southern Bancorp and a couple of medical schools and a business school. We have embedded financial counselors inside of this healthcare clinic. It's a federally qualified healthcare clinic, so healthcare clinic for low-income families. And their intake process, they ask financial questions. And when they find that these people are struggling financially, then we take them down the hall to a financial counselor. And we are doing a longitudinal study over a number of years to see if improving their financial health will not also have an impact on their physical health. I believe there's a strong correlation between that.
Absolutely.
So it's physical health, but it's also so families and people can thrive financially, economically, and live their version of the American dream.
Yeah, physical health, mental health, I think it is a direct correlation.
Absolutely.
So that's amazing. One thing you talked about, I read also, is obviously he's a CEO, but I think you like to call yourself the Chief Cultural Officer. What does that mean?
Well, I think culture trumps strategy, right? And for us, we are a product of about 15 acquisitions. We've grown really from an asset standpoint by acquiring smaller community banks across our footprint. Every deal looks good on paper. Accountants and investment bankers can make all of them look good. If you don't have the right cultural fit, it doesn't work. So I spend a lot of time focused on helping to build the right culture. Our team, I tell them, we're not bankers. We're wealth builders. Our goal is not just to make a profit, it's to make a difference. And when people have purpose in their work, it's much more meaningful for them. It's much more rewarding for them. And have a stickiness, and they stay, and they're excited about doing the work. So the culture, in my mind, is so important. That's why we focus so much on culture. Everything that we provide for our customers, we provide for our employees. Our employees live in the markets that we serve, so we provide a discounted home loan for them. We provide access to market rate salaries and great benefits, great health care, because that's what people need to survive and thrive.
The average person, when they think about, doing good, they think you can't do charity or do good and also make money. Yeah. And obviously, you're a bank. You're serving that. So how are you actually able to do both?
Yeah, so I said that's the biggest myth, right? So we are a FDIC, we are a state member of the Federal Reserve, and then, of course, FDIC Insurance. We are regulated like any other bank. If we don't have sufficient earnings, we're going to be shut down. So being safe and sound and being profitable, that's a given. You've got to do that. I believe in the long run, I believe in this kind of view of stakeholder capitalism. For us to do well, our communities have to do well. If you got a bank that sits inside a community that's not doing well economically, that bank's not going to be around long. So it's really selfish, right? So I need the communities I serve to do well as well, because I need them to need us, and it's a symbiotic relationship. And so I really believe that this higher purpose, us being a B Corp, us focused on profits and purpose, is what makes a difference for us.
I love it. So now let's kind of, start thinking about the future, right?
Yeah.
You obviously been at Southern Bancorp for, since 2013.
2013.
So it's at 11 years now. So how are you, and obviously you've seen the bank go through different cycles, but this new iteration, right? How is your bank actually utilizing AI?
Wow, so we are very, very technology forward. One of the things about Southern Bancorp that's unique is we have our own research and development arm. We've built inside our bank our own fintech department, and we have built a cloud-based core processing we call System 61. So we are actually building apps. And our apps, what we try to do is solve problems for customers. So we ask customers who have problems to come in and work with our development team to be a part of the team and help us build apps to help solve problems. For us, we're learning and iterating and trying to figure out how can we serve people better. And so AI is built into that. I think all banks are trying to figure out how better to use AI. Can we use that for better models of underwriting? Can we use that for more efficiency in back office? And so we're trying to figure it out as well. We're struggling through that and trying to work it out, but it's a game changer, and you got to embrace it. If you're not going to be around.
So I want to go back to one thing you said, right? And I think obviously the average American, probably 90% of average Americans don't have this problem, and that is having your bank account, your balance being more than what's FDIC insured.
Yeah.
And so for the person that you had that has $4 million at your bank, can you actually just walk us through, like, FDIC insurance up to $250,000, but you were still able to appease them? It's like, oh, actually, you're in these different securities. So how does that actually work?
Yes, a couple of ways. So for large investors, particularly municipal investors, we hold deposits from school districts, from cities, counties. They typically require you to pledge a bond to back that. But for your average individual who wants FDIC insurance on all their deposits, we take part in reciprocation products. Mm-hmm. So I might take in $4 million. I take those dollars in, and then I reciprocate it to a number of banks, and it's all done through a couple of companies, Intrafy, a couple other companies, and reciprocated across a number of banks up to about $250,000. So the money actually is sitting in those other banks at the FDIC insurance limits.
Gotcha.
But I'm their relationship lender and the relationship bank, and they work with me. So it's just a reciprocal relationship that we have with other institutions.
That makes sense. So one of the things you talked about earlier was, one, when it comes to actually becoming financially free, the knowledge starts with budgeting. What would you say the next layer is for helping people, dispel their myths and actually becoming financially free?
Well, I'll tell you what, budgeting uncovers a lot. Mm-hmm. And this is what I do with my friends and students, classmates, or whoever, when I'm teaching budgeting. I give them I'm old school, I give them a steno pad, a little bit of steno pad, and I said, for the next month, I want you to write down everything you spend. Mm-hmm. Everything. Now, that's a discipline. I mean, when you go to the gas station and you get gas and you go inside, get a Coke, write it down. Chewing gum, write it down. People don't realize how much they spend. Let's look at how many folks are automatically hitting your account from whatever it may be that you're not aware of. So that knowledge of what you're spending your money, that's what budgeting is. And so once you find that, what people realize is, man, I don't have to buy a $3 Coke every time I go to the gas station. Maybe I go and buy a liter for $3 that'll last me 5 trips to the gas station, and I save. Now let's take that and let's put that into a savings vehicle, and let's take your debts and let's rank them. Let's take the smallest one and let's pay it off, and let's roll that up until you finish. And people are surprised how quickly they can get out of debt if they have the discipline to do that. And so budgeting is number one. Then clearly understanding where you spend your money, and then really working on reducing that debt. Mm-hmm. And all those things will help you. And then we start going to your credit score, right? So I want you to know, do you know pull your credit report. Everybody at Southern Bancorp knows how to pull a credit report, sit down with the customer, and go through it. Because, listen, one of our retail leaders, she pulled her credit report. So if I'm going to ask everybody, I've got to do it. She pulled her credit report, and she looked at it, and she had a second husband. She said, well, I remember one of them, but I don't know about the second one. But they make mistakes, right? Yeah. And so we teach you how to dispute and challenge things on your credit to just improve your credit score just simply that way. So there's a lot of things you can do that are simple it doesn't matter how much money you have, doesn't take a lot of time, but you got to be disciplined to do it.
I think if a person, because now it's so much easier to just spend money, there's a lot of subscriptions that are actually being charged on your credit card, so you definitely don't actually see that. But the fact that people don't know that you could actually pull your credit card or your credit report and actually dispute it, just for the interest of time. If you could go back in time and speak to your 18-year-old self, what advice would you give yourself?
Yeah, I love this question.
A young Darren Williams.
Yeah, a lot of things, but really, what I say is people are a product of their experiences. And while I've learned a lot, I wouldn't be who I was if I hadn't gone through those experiences. So I'm not sure what I would change. I've had a great life. I've been blessed. I've been pleased with what's happened. I've made a bunch of mistakes, but I've learned more from mistakes than successes. And so I welcome those successes, those mistakes, and I probably wouldn't change a thing. If I was forced to give you an answer, I might say, listen, I'd take a few more chances. I remember my wife when we were young, married couple before we had kids. She said, "Let's go live abroad," and I was all about my career, all about building law practice. I'd probably do that now. A lot of things I might. The world is a small neighborhood now, right? And so I might do those things. But I embrace the mistakes I've made. I embrace the challenges I've had because it's made me who I am.
As we live in this world that's obviously changing, the one thing that's also staying constant is the gap between the haves and the have-nots, the rich and the have-nots, right? And the reason I bring that up is because the wealth gap continues to get larger and larger. We saw the stock market make highs with Democratic, president, Republican president. And so how important is owning assets in this world to getting closer to the American dream?
Well, I think it's extremely important, right? So, I don't prescribe for someone what their version of the American dream is. It's whatever they choose it to be. We want to support them on that journey. But clearly, owning assets provides a level of financial freedom that helps you relieve yourself from the mental and physical stress of being debt burdened. And so I think owning assets is extremely important. At least when we talk about our folks, we talk to our customers about that wealth journey. But it's probably more important to reduce debt. Compounded interest is fascinating, right? It's a great thing. It works for you or against you. When it's an asset and it's an investment or a stock, it works for you. If it's debt, it works against you, and they're equally as powerful. And so we try to tell people, listen, we got to get out of debt.
Yeah. It was Einstein that said the eighth one of the world is compound interest. He who gets it earns it, who doesn't pays it. And so I feel like for the interest of time, I'm going to ask maybe one more question. And that is, and I think you get different answers from different people in your seat. What's your view on cryptocurrency, and is your bank at all open to embracing that in the future?
Yes, listen, we're a small community bank, and we're pretty conservative. I've got a nephew who's all in. He's all in.
YOLO?
He's all in. And I continue to tell him, just diversify your investments. Listen, it's funny. Years ago, we bought crypto for our board members.
Wow.
And we wanted them we set up accounts, wanted them to, not a lot, wanted them to invest. Because listen, you've got to embrace technology. You've got to embrace change. And so we're watching it. We're not about to start getting in that game, but I think there's a lot you can learn. Crypto is actually, in my mind, not as important now for us as blockchain. Yep. What it's built on. The blockchain is impressive. And so this cloud-based core process that I talked about us creating, it's built on a blockchain. And I think there's just powerful opportunities there. So we continue to watch it and study it. We're not getting into crypto, and hopefully my nephew, if you're listening, please diversify. He's all in, but it's another asset class, right?
Yeah. Well, I just want to say thank you so much for joining us here on Financial Freestyle here on Yahoo Finance. Guys, thanks so much for joining us. My name is Ross Mack. Make sure you guys tune in to another episode of Financial Freestyle, and we want to give a warm thank you to the CEO of Southern Bancorp, Mr. Darren Williams.
Thank you, man.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.